following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday through Friday, and right at this time, at 11 a.m. till noon Eastern at 877-927-6648. Great programming earlier this morning, and hopefully I can continue. And we're looking at the E-mini, which is down 225. It's kind of almost the best level of the day. Let me just show you this here in the daily chart. Has gone to a very quick peak A, B, C, D. What do I mean by that? Let me just do this, show you for those of you who are new. In the Chapman wave methodology, what we look for is the most identifiable lowest bar or lowest low. And then we look for sequentially higher peaks going to the fourth highest peak. I label them alphabetically A, B, C, D, uppercase on the way up, lowercase on the way down, and the objective is to get you at least to a D, and at that point, other things can happen. It even can go to three higher peaks, E, F, and G. But let's just deal with this right now, and let me show you what we're looking at. The E-mini made a peak D at 2190. That isn't correct. It should be 2191, I believe. Yeah, 2191.50. 21, let me just type that in here. This is the E-mini September, 2191. This will be done very soon. 2191.50. The MACD, the moving average convergence divergence, declined sharply. It declined sharply right from mid-July. It was pulling back. Same with the stochastic, making lower lows and lower highs. What's really important about this, the price is the arbiter of the trend. The price has been holding the 9-period exponential moving average, and it tested it this morning. The weekly chart has made that peak D that we've been looking for, and the 120-minute chart went to a peak D, pulled back, ran up to an E, slightly higher, pulled back, and then ran up to 2186.50, and that's a peak F, and that says that there should be a sharper decline. The technicals were all failing, and lo and behold, the E-mini this morning flipped it, and it went right down from the 2186 area to the 2170, I'm going to guess here. Now, let me see, 2175.75. Okay, now I want to move this away. I want to go to the down and just run the numbers because it's very important. This is a very critical period, and there are a number of reasons why. Politically, it would be very unusual for the Fed to do anything in this particular time frame. Once in a while they've done it, but most of the time they don't do anything. They talk a good game, but they don't really do anything. And they like to talk yields up or down. It depends on the era that you're in. And right now we're in an era of competition for lower yields, right? So that's number one. Number two is within the context of the Dow, we made not a D, but an E top at 18,688 on the 15th of August. There has been a time decline that has taken us to 15. This is, I think, the 16th day. The last time we had a 16-day correction was when we popped up from the high of July the 20th at 18,622 in the Dow, peak C in the Chapman wave, down to 18,247, about 400 points, and then ran up 9 days down, 9 days up, and the 9 days up actually took you to an E, but it was a little less than 9 days up. They took you to the D all-time high. 2 days later, it went to an E. On that day in between, on the 12th, that's where we shorted the market, shorted the Dow, that is. Now, we have a mix of longs and shorts. At this particular point, and I think it's quite important to discuss this in different time frames, the daily is still in a sell mode. It hasn't changed from a sell mode yet. The technicals are attempting to rally, but they're not doing. They've moved up. The stochastics moved up sharply, but the price really hasn't appreciated as much as you would expect. The weekly is the one that's actually formulating some kind of a consolidation from that 18,668 high, and now it's going sideways. It's held the 9-period moving average. By tomorrow, if the Dow is down under 18,400, that'll be a big negative. But if it holds sideways here, we could be using time in the rotational aspect rather than price. to consolidate. The monthly chart is still looking great. It's in leg C. And as I say, this 120-minute chart did make some kind of a top. We'll see what happens. The day is young. What's important is I'm going to go SPX.X. This is the S&P. Same scenario. Peak E at the 2193.81 high of August the 15th. I'm sorry. And it hasn't broken to the upside yet. There are a lot of actions that are quite impressive here. But price is, as I say, the arbiter of a trend. And so far, it's holding the 9-period moving average. And if the MACD, which has taken a month and a half to come down, suddenly starts to cross positive and move up, we could see a spike higher. And that would be very impressive. And in the both the Dow above 18,668 is very important. If it closes above that, closing above the S&P 2193.81 level, be very impressive because it'll make a leg E up in the weekly and extend the S&P monthly to leg B, whereas the Dow is in leg C, if that makes a new all-time high. Let's go on to the IWM, which was very impressive yesterday. And today it's a little bit under yesterday's high. It's down 12 cents. And it's in leg D in the weekly and leg A, a brand new A in the monthly. That is incredible. And in fact, ABC, it's in D, leg D, maybe a peak D in the 120-minute chart. The day is young. Let's go to the QQQ series. Here we go. It did make a new recovery high at 0.12. Yeah, 0.12 on the 7th. That was yesterday. So this is either an F or a brand new A. I'm just leaving it aside to say the techniques are still very weak. The day is young. Let's see what happens. A close above 118.50 in the next 2 days would be really impressive. And we've got the one-to-one that I've got these green lines in the Chapman wave parallel one-to-one extension. It's got a little way to go if it wants to do that towards the 118.50 area, and it's at 117.52 right now. As I say, day is young. A punch into the 118.50s would be quite impressive, I must admit to that. Now we'll go to the VIX index quickly. VIX index is, it rallied a bit. It's up 12 cents. It did hit the 9-period moving average. It's pulling back as long as it's under 13. This is, I said to subscribers to my opening call, that you got to consider as buying pressure. So we'll see what happens here. 12.06, if it goes under 12, the market should go higher. If it pulls back sharp, the market pulls back, the VIX should try to get back to the 12.50 area. Okay, gold. I like the action in gold very much. At this point, the single leg A should have failed today, and tomorrow we'll see days young. It's down only 30 cents at 13.49. It's made a peak B, but to be very impressive, you've got to break this this Chapman wave down channel and inside track resistance right here. There's no question that by Tuesday of next week, the gold has to be at 13.60 or higher. And that would be very impressive. If it falls, 13.37 will be the key support. Let's go to high-grade copper. High-grade copper, it's just doing nothing. I'm not even impressed with high-grade copper. But the dollar's had a nice reversal from much lower lows. But actually, it's in the weekly chart, it's holding a trendline support. I'm not that impressed with the dollar. I must say that was a very deep correction the other day. And you've got bonds down. Looked good the other day. Looks bad today. Down $1.23, 138.33. I'm going to once again raise this trend line. Let's see what happens here. But in the meantime, the TLT must hold 137 over the next 3 days. Otherwise, yields are going to go quite a bit higher. I'll be back. Basil Chapman, Tiger Technicians Hour.
If you're looking to discover a new financial resource and diversify your financial portfolio, consider the new Market Safe Focused Commodity CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 6 equally weighted commodities, including gold, silver, copper, nickel, soybeans, and sugar, in one powerful CD. With annual pricing caps of 50% per component, you could earn up to a 50% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The October 13th funding deadline will be here before you know it. So hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks, we're back. Let's just go through a couple of things here. Crude oil. Let me look at crude oil. And crude oil this is very interesting. Very nice move there, up $1.55, up at 47.05. And I've been saying that it's in a rectangle formation. And if there's a close, a decisive close above the high of 2 days ago, 46.53, I have to consider that that's an important aspect because it could then pull back a little bit, touch an important moving average or the body of the candle, and then push higher because it's telling us something. And if it closes below, look out below because the low of the 1st of September at 43 could be pierced. So now the day is young, but so far it's above the high of 46.53. It's trading at 47.11. Keep that in mind, the whole scenario. Now, I need to do a couple of things here. Actually, I had a quick question in the den. I think it was a quick question, but I'm going to answer it in a CHK. Was that the question? Oh, CHL. CHK is looking fantastic. Chesapeake Energy. Look at that. Beta Peak E. Now it's A, B, C, D, E. Whoa, F. Very strong. And it's going towards a new high, a recovery high above the high of April of 759. It's got 15 cents, 16 cents to go. Very impressive. That was a mistake. So that's CHK. Let me put that down here. CHK. Oh, God, where's my notebook? CHK. I'll do it here. CHK. But the question was CHL. And CHL is different. Chesapeake is the one. We're looking at China Mobile Limited. Oh, China Mobile. This is a tough one for me. I'm just going to say, yes, it could move higher. The extension that it's taken to pull back in the daily is a little bothersome. It's got this arch formation. The weekly chart has a question of whether it's a peak F or a C. And the technicals there are very good. And the monthly is improving. So all I'm going to say is if you are not in CHL right now, trading at 61.94 up $1.15, I'm going to suggest you have a little patience because I think it could be trapped for a little bit longer between 62.5 and 60 and a half. What was the low there? 60.60. If it takes out either one of those levels, then I'm going to say yes. Now I'm a little bit more impressed. So I'm just going to say, forgive me. The question is, would you be buying? Is that the question? Buy now or wait for further pullback to the moving average? color me confused. Yes, I don't want to. If it was based on the weekly chart, I'd say it's holding the 9-period moving average. If you want, you could start a small position here at 61.94 and only add to it on strength, not on weakness. But I would say, hold on. Let's look at it again on Monday. Let's give it today and tomorrow to settle down, and then maybe ask me again. I do like it. I'm thinking risk reward, a 1.5 test the 64 level. That's 2 points, 2.25 points. Yeah, actually, something. Test the previous high. I need another day or two. I'm sorry. That's the way it is. Okay. Let's see. I wanted to do. I said I'd look at the TLT. So the TLT, you see that monthly chart is at a peak E/C. It went right up after a massive up channel move. It went right up and tested the resistance, and it's pulled back, and it's underneath the Chapman wave inside track support. The MACD is at 80, and the MACD is strong, the 80, and the stochastic's at 88% and flattening out. I'm going to say I need 3 days on bonds because they've just whipped around up and down, but they've really just been traveling between 141 and 137. Actually, it's even smaller than that because it's an apex that's narrowing. I'm going to say, give me a day, and I just want to show you this particular thing right now. If I look at the TLT, this is the Chapman wave methodology. It's techniques that were adapted using software to program resistance levels and support levels. Look at all the support at 138 to 135. Tremendous support. Look at the resistance. Three resistance points, but on the support side, we've got a plethora. When you look at the weekly chart, there's only 137.93. So I'm going to suggest let's have a little patience. I think that yields are kind of trapped right now. I don't think they're going to go much higher, but let's hold off on that. And I'm just going to give you the levels to watch. A close under 137 says watch out below. You just got to be real careful, okay? Now, I'm going to get out of this. Oh, no, I want to do a couple of things. Look at this. The diamonds, the Dow diamonds. Look at all those resistances in the 186s. Look at the supports in the 183 to 182.5 area. So that's clear. You break above that, it's very positive. You break below that, it's very negative. So that's very clear for me. 183, a lot of 183s to 182s in the support level of the weekly chart, and 188 is the only one on the upside. And then 196, way out there. I think that's eventually going to be hit, but not yet. So now we're looking at the monthly chart. The monthly chart says in the 185, 184 to 186.5 area, a lot of resistance, and then you get 191. So I'm trying to put those together. The 120-minute chart shows 185s. That's the reason why I've been very comfortable with the position that we have shorting the Dow, but I'm not comfortable with the fact that it's been like 15, 16 days, maybe more, since the 12th of August. And nothing really has happened. So look at the SPY. We've got the SPY, same little narrow trading band of resistance and support levels. Look at the QQQ, a little different. Only one resistance at 118.81 and a lot of support in the 116 to 115s in the daily, or two. And then a lot of resistance in the 120-minute QQQ at 117.98. So I'm trying to put the package together. I'm trying to say to you that when I look at this pattern here, this is probably the narrowest trading range we've had in ages and ages. That's number one in the Dow. But number two is within the context of the bars themselves. These are tiny. Look at this. Look how big the bars were before. Now look how tiny they've been for the past few months. The Fed, I think, is in their own way kind of prop up the thing. Oh, we've got Jim in Oldsmar. Jim, how are you?
Hey, thanks for taking my call. I appreciate it.
My pleasure. You'd like to look at?
GE, General Electric.
All right. Do you have a position?
No.
Okay.
But I'd like to go long it if it would get down some more, I think, but I'm not exactly sure where the strongest support area is. It's mostly moving sideways lately.
So there are a couple of things that are going on. I don't know if you heard my program the other day, and maybe it was a week ago. I was saying GE has got a pattern that says to me, it's a very familiar pattern. This goes back to when I used to hand draw charts way back in the 80s. And I used to draw a straight line when there was a move down like this. And then I'd draw some kind of an oval pattern. And I called it the propeller shaft if the base got broken. It's like the inverted stalk leg formation. And what can happen, you don't, on the downside, you hardly ever get a 1-to-1 to the downside. You often get it on the upside. On the downside, you do get a pretty sharp sell-off. And that sell-off says that GE has gone sideways basically since the week of the 27th of July. No, since July 27th, that's the daily chart. And then it broke that support on the 6th of September. I think it's worth us having a look. Jim, can you hold on a little?
Sure.
Okay. I'd like to talk about GE because for me it's been a great market indicator. And it is telling us that the upside right now should be limited, but GE is really important. And I want to talk about GE in terms of the context that it told us that the market would go higher when it broke out into the 30.10 area. I'll be back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. We're back with Jim in Oldsmar, and we're going to be looking at Oldsmar, Florida, and we're looking at GE. And this is what I've been discussing. GE is at 30.95, down 11 cents. Even on the day, it's suggesting that the upside is going to be limited unless it can get to a plus. Now, what I'm looking at is there's a chance that GE wants to visit the, let me just double check. I'm almost sure I know what this is, but before I actually say it, I believe it is the 200, yes, the 200 simple moving average, which most fund managers look at, which is now at 30.42. I love to look at the exponential moving average, a slightly different. It has more weight on the closing price, the last closing price, and that's at 30.24. So this is what I'm going to recommend, Jim. I hope I'm on the air when it happens. I hope someone reminds me. I hope I'm actually seeing it occur. But I would like to see GE not break lower than. I'm going to do this now. Finish the weekly chart right there. Okay, a whole bunch of things are suggesting that the 30.40 to 30.20s, let's call it just above 30, that's an area that's going to be absolutely critical for GE, and that's only 94 cents down. If this market suddenly takes a 150-point tumble in the next day or two, GE should, we don't know, but it should pull back a little more. So that's the area where I'd like to look at GE and say, market-wise and GE-wise, is it a wise decision to start a new position in GE at that level? But at this particular point, unless GE has a fabulous bounce and it goes quickly above the high of 31.57 that was made on the 23rd of August, which really would change the whole scenario tremendously, both the daily, the weekly, and the monthly, if it did that, I'm just going to suggest that you hold on a little bit, have some patience. I know there's not a big deal between if you're looking at a stock that has to go, should go to 32.96 for leg D in the monthly chart. It's what's the big deal? 50 cents here or there. The difference is that if it takes out that 30.20 to $30 support, there isn't really very much because there's a gap that takes it to the high of the 28th of June of 29.67. So I'm just going to say, hold off, and I'll tell you why. There are two reasons that are good to hold off. One is, I would normally say, just take a little nibble at between 30.40 and 30.20, and then just hold off because you want to add. I'm not even going to say take a nibble for two reasons. One is, if it breaks these levels of support, I think I might be wrong. It has before, and it might do it again. It might be telling us about the general market as an overall trend. And if that trend affects the weekly charts to go to sell signals, which they haven't done, none of them have gone to sell signal yet, then I think G is going to be pulling back further. That's why I don't think being early I don't see any reason why you want to be early. I do want to be buying strength if I'm wrong, but let's just let it play out that there's a real good chance it's going to go to the lower 30s before it goes to the 31.50, 31.70 area. Does that help you a little bit?
Sure does. I appreciate it very much. I was kind of looking at all the gaps, ups and downs from back at about the June 27th. There was a lot of gapping down and a lot of gapping up.
That's right, and it gapped up on news. And I had mentioned that the move to Boston, which I don't think is going to be cheap. They're paying top rent. I don't care what bargains they're making. It is right at the top. They got to get their employees in. They've got to help to let the employees be able to get mortgages and stuff. The real estate here in the Boston area is just through the roof. So I think that there's a lot of stuff that's going on, and it could in fact be this could be impacting GE. I hope it's impacting GE right now, because GE is going to be a bellwether for me, because when it gets to, I hope it does, and I'm pretty sure it's going to sometime this year, it's going to get to the 33, 34 area. It's going to be a market indicator to say to me, okay, this is it. We're going much higher in the general market. That's my thinking. So I hope that helps you. And all I'm going to say is, just give me a call if you see it going down to when I haven't talked about it, and it's down in the 30.40 to 30.20 area. Give me a buzz, and let's go through it again, okay?
Okay, thank you very much.
Thank you very much. That was Jim in Oldsmar, and I like the fact that he's focusing on GE. I think it is going to be a much bigger stock, but it needs time. It's had a fantastic move. It's gone from the 19s to the 32s. It just needs time. All right. So the other thing that I want to look at, so that was GE. Had a couple of questions. Let's follow up on yesterday. We were looking at the XOP, and I said, gosh, this is acting so nicely. And we had a caller we had someone in the den, Albert, who was looking, he owned GUSH, GUSH, and we were trying to find the ETF that goes with it. And I said, oh, I love the look. And if it can clear the 92.80 area, that's going to be really important for the stock, because then it can start to tackle the high of the week of June, the 10th, where it made a high of 99.29. Well, here it is at 96.02, up $6, up 6.75%. This is 3 times long, the oil and gas bull. So what we were looking at when I finally figured it out, it was the XOP. XOP is having a fabulous move. See, it's up 2.34 today. So there you've got your 3 times long the XOP. That's gosh, and I love it. I think it's looking really great, and I love it. And I'm surprised. I'm actually pleasantly surprised. And that happens. I didn't realize it. I read about it, that sometimes if oil can at least remain stable, the oil and gas exploration can actually work very nicely to the long side. I didn't get a chance to do this. I hope I'm not too late. This is the, I was just about to put a down arrow there, and I ran out of time because my engineer, I think that's Steve, my engineer, reminded me that I forgot to look at my IMs and that there was a caller, it was Jim. So this is it. I think that the market, this is the S&P cash. And then I had a good question, which was Mike. Now, Mike asked, is the Indu in conflict with the ES? 120-minute charts. You went so fast through the ES, I didn't see the charts. So this is the cash. The ES, I have to go to this because I lost all my data. No, it's there, but it jumped up because there was a smooth, I made a terrible mistake. ESU 16, there. This is the 120-minute chart here. It made a peak F right there. Let's see what the Dow did. I did so much work on this. I should know very well. Oh, the Dow's failing. It's making a peak A and a B. Well, all right, you asked the question. I'm just going to do it. For my subscribers, I've started to include the Chapman Wave 5. The ideas were stimulated by Elliott Wave, but I use it kind of differently. I break rules enough to say that if anybody's using Elliott Wave, they'll say, huh? But look how beautifully, how many times has it gone to a 5? And my contention was, we've made a 5 at the bottom in the Chapman Wave. This particular one kind of corresponds to Elliott. No, it doesn't, because this wave 4 went too deeply into the upside. So let me just make it real clear. I put in the arch formation, and I said, I think we're going to fail and not make a 5. And so far, that's accurate so far. This is the 120-minute Dow. So yes, the letters are not corresponding in the Dow 120-minute to the E-mini 120-minute. So good point. I have a couple of questions. I'll try to follow up during the break. I'm going to just go to the charts that we'll discuss. I'll be back. Basil Chapman. Dow is down 43. S&P's down 4. We'll talk about the market as soon as I get back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, accurate active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Perfect. I must thank Peter for that drop bucket. Peter from London, from England, for that drop bucket pattern. Yeah, that was real. That nice drawing too. I was going to transfer it here, but I just didn't make. Tomorrow's Technical Friday. Maybe I'll get a chance to do that. That was the drop bucket, Chapman Wave drop bucket pattern. So I was asked about the comp index. Look, the comp index is very much the same as the NVX 100. It's an alternate count E/A right here. I think this market is kind of struggling. You see that if we get this doji close in the weekly chart, very quick peak C, 1 bar down, then D with a doji, even though the MACD and stochastic are very strong, it suggests to me that we could be pulling back a little bit in the comp index and the NASDAQ and the others. And at 5,263 down 20, no big deal. Having made a new recovery high, I just don't remember right now if it's an all-time high. That's going to be an issue. But let me do this. I want to get out of that, and I want to cover a quick question that was asked of me. Close the workspace. There we go. Close, close, close. I wanted to do this. I wanted to bring up my longer-term charts right there. I want to bring up my triple yield chart. And the triple yield chart is really going to be very interesting because Doors sound should be there. No one's having problems with the sound. See, the wood, W-O-D, is acting very well. It's gone to a new high, and I've got this as F/B. Everything about it really looks like it's more than a B in the weekly chart. This is the iShares Global Timber and Forestry ETF. The big question here is why is the housing sector, the Philadelphia housing sector, stuck at peak D and not going higher? That's a big issue. So now let me go to the yields, and let me show you something. Within the context of the yields, I wanted to show this because what I'd done at the last time was I showed that in June of 2007, there was this cluster formation where they were all at highs. The white is the 30-year T bond yield. The brownie golden is the 10-year T note yield. And the cyan light blue is the 5-year T note. And you can see that they kind of stuck. So they made the high over there. The 5-year, made a low of 5.41. Do you realize that it was once at the 5-year was once at 5.1%, and now it is at 5.1%, and then it dropped to, wait, something's wrong. Wait, 5.1%, and now it's at 5.41. Wait, let me just do that again. SBB, something was wrong. Okay, right there. It was at 51%, 5.1, 51. Oh, 51%. And now it's at 5%. No, can't be. Oh, why am I getting this confused? It should be point something now. Well, it dropped from 51 to 5.41. I don't know what the heck is. Whatever it is, it dropped huge. from up there in the 50s to the 5s. Yeah. That's exactly what happens. Okay. So now what we're looking at is they've rallied, and now I'm going to expand this so you can see it very clearly. This is very important. You see that the yield right there is at the high? Remember, this is the line that I drew in to say we've been here before. We've made a peak B already in the 10-year, and we've made a peak B, a much sharper move to the upside in the 5-year. So what's really important is if the 10-year next week goes above 16.35, that starts leg C. If the 5-year goes above 12.41, 1.24%, it's going to, if it goes above 1330, wrong one. 1241. If it goes to 1242, it started a new leg C up. And if it reverses and makes the arch formation and just continuing the sideways move to a lower low before it goes to a higher high, that's important. But if it doesn't make this new lower low, that's going to be significant for me. And it's going to say, hey, watch out, something's going on. All right, now I just want to, so that's the yields. Those are the numbers to look at. I think the 10 and 5 are more important than the 30 right now. I want you to go back to this. A question came up. I did. No, I didn't. Quick question here is Apple. Apple right now is trading at, down 105.80. I don't know how many times I've said this. I think that Apple is a mature company. It is not the innovative company it was. It made its all-time high at 134.54 back in, I should have put the date, April of 2015. It is not going to see, my opinion, it is not going to see those highs for a long time. Number one. Number two is it's in the sideways consolidation pattern. The pattern we saw in the GLD is a very familiar pattern that says lower lows and lower highs. And I don't think until Apple can really establish key support in the 102 to 95 area, 99 to 95 area, that I can start to look at Apple as maybe turning around. All right? That's my opinion. It had a nice little pop up. It's going back. I know this pattern so well. It's a beautiful down channel, breaks to the upside, then fails instead of taking off to the upside, and that's the candle today. Everything about it says the daily chart should test 104. Everything about the weekly chart says that if it closes under 104, the MACD will start to dip lower, and the stochastic. So it's really, think of it as a dividend stock more than anything else. I don't think it's going to have its big move, 15% or 20% to the upside, until it really establishes a base of support and it comes up with something new. I mean, let's face it, Steve Jobs is gone. The people handling it right now, they're not Steve Jobs. It's just real simple. He was the guy. Okay, XOP. XOP is the Spider Oil and Gas that we were talking about a little earlier on. So the support right now, it's at 38.94, up 85 cents. This pattern is very familiar to me. In the next week, I would not be surprised if it goes just a tad higher, and then it comes back and has a big consolidation of about 3 weeks between 38.20 to 38.94, 38.20 and 36.20. In that area, it could chop for a while. That's the way I'm looking at it right now. Would I buy it at this particular point? You know, the weekly has improved tremendously. I just see risk reward in terms of a little bit to the upside, maybe a point, but then I think it takes a while and consolidates. I'd rather have patience to try to buy it a little bit lower down. Could be this could be wrong, because these things really do move quickly, and they have moved quickly. So the XOP is the Spider S&P Oil and Gas Exploration ETF. All right, now I think I've covered almost all the questions that came up. Just going to do a little refresh there. There comes one. National Geographic. No, it's not that. Okay. I wanted to do this. I want you to look at the big picture. Let me take you to the Dow right now, INDU. The Dow is really consolidating sideways. What I've discussed for a long time is we won't know for years what the Fed is doing right now. There's just a really good chance that the money is being kind of pumped in to keep the market buoyant. That's just the way I would expect it to be. You can call it political. It's just de facto what happens in an election year when the party in power needs the market to hold. But most importantly, it's this rotation. For instance, if I go to the IBB, there's a nice move up today, up to a 288. And the suggestion that I've been making is that in this rotational aspect, while other areas are beginning to falter, we might see the weakest areas find some strength. We're finding that now in the XOP over the last month has been doing exactly that. It's been moving up while maybe other sectors have not been doing very well. And I'll be back in a moment. I want to discuss it with the XLU. It's been going down. It has a nice day today, though.
My name is Steve Rhodes, author of Mastering Probability and host of the Trader's Edge Show, heard daily here at TFNN.com. On Wednesday, September 14th at 5 p.m., I'll be hosting a special one-hour event, The Ultimate Reversal Patterns. I'll teach subscribers how to identify and trade market tops and bottoms. You'll learn Tom DeMark's TD Setup, TD Sequential, and TD Combo. Plus, I'll show you how to identify Gartley buy and sell patterns, which means you'll learn how to master the D point of any A to B equals CD pattern. More importantly, I'll teach you the most powerful pattern of all, by price relative strength divergent pattern. These patterns work for stocks, for ETFs, future contracts, currencies, and these patterns work on every time frame. By signing up for Mastering Probability right now, you get the first month of my newsletter service for only $49, and that includes Wednesday's Ultimate Reversal Patterns webinar. This $49 offer is only good through September 14th, so act now. At only $49 for your first month, I guarantee this is an investment that you won't regret. For all the details of the upcoming workshop and to reserve your seat today, visit the front page of TFNN.com now.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with Swim Lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
Hi, folks. We're back. So GT sends me a note saying August had the smallest range for the Dow since 1928. And then he has, you see a crash next year? Not so funny, actually. In my overview, in the coda formation that I've been talking about that we're in right now, the icons that I'd be looking for show up when I'm not expecting it. And they are things that just happen. If I had to make a list, they probably wouldn't be on that list. But when I see them, I say, oh my God, I forgot about that. And that fits in perfectly with my contention that, or prognosis, that we're going to have a really tough 2017. At this point, that's the way I'm looking at it. But I still expect a huge rally to the upside. That's just going to knock the socks off everyone and bring in people that have not been in the market since 2006, 7, 8, 9. Just they've been out the market. That's my contention, and this is just one little icon that goes with that. Okay, so let's just get that out of the way, and it doesn't mean to be nervous. We're in the market now. The Fed is there to help us. I think it's going to stabilize the market. The question was GDX. I made an error. I had an appointment that the time was changed, and all of a sudden I had to go out earlier than I ever do in the morning because I'm usually here until I get my report out at 8:35, and then after that I can go to the gym, whatever it is. But this is completely different. So I usually try to read everything through to make sure. I especially say to myself, don't make any mistakes today because you're going to be out the office by the time the market opens. You won't be able to send a correction. And lo and behold, number 6 in the list on my Traders Corner, there are 21 bullet points. Number 6, I went and said buy small at, and I gave the price. And I gave the price, instead of 27, I said 28, something. If we had said 27, we would have been in it, and I think we would have been in it. And in fact, it would have been, or we would have just not yet been in it. Instead, we're in it. If you bought it at the price I wanted, it didn't hit it. But if you bought it underneath it, that would have been okay. But you know, me, I'm very specific, so I hope nobody actually bought it. So the question came up. Now I'm going to go to something that's a good example. The GDX is trading at 28.02. It's down 51. And the question is, where's the GDX going? I'm going to make the suggestion based on the action of the dollar, which is acting really quite poorly. It should not be at 94 right now, as far as I'm concerned. It should be at 96.50. It's 2 points lower, actually 2 points lower. I'm going to make the suggestion that something's going on, and I think that gold is telling us that if gold can at 1344 can hold, it shouldn't go down much more than this. I would put it at 1341. 1336 is the 9-period moving average. It closes below that. This is going to be looking like a single leg A up. Why did I do that? A? There was nothing. There was no trade. This is actually a single leg A to the upside. Oh, my. So we've got to be a little bit careful. So I'm going to make the suggestion that if you were wanting to buy, I think the question was, where would I buy the GDX? I'm just going to say to you, 2778 is the 9-period exponential moving average. I would nibble at it closer towards that level, and I would certainly put a 40-cent stop on it. Why? Because I think there's a chance that the Fed wants some kind of inflation, and the only way they might be able to do it is maybe through commodities. I'm not even 100% sure about it. So that's a nibble, you can start a little position, have a very tight stop if you wanted to get to the gold miners. Okay, now let me do this. I want to go to, just real quickly, the Dow is down 33. I think the market's going to struggle here a little bit. The big thing is tomorrow, and I'm going to have Technical Friday tomorrow. I will be on a little later on with Tom. The market will have closed by then. I'll be able to discuss things in a little bit clearer fashion. Just make it real simple. The VIX is at 1227. The VIX goes to 1250. This market drops towards the close, closes at the low. The VIX pulls back from, you can go a little bit higher. I think we're limited on the upside at this point, just stuck in a very narrow range. I'll be back later with Tom. Have a great day. Otherwise, see you tomorrow. Check out my opening call.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.